Ajay, first, are you bullish? Are you bearish? How are you feeling about the market? Did I catch you meditating, or was
I think
that
it's a wonderfully,
napping?
I would say it's an excellent market. Sorry?
No, I just saw you with your eyes closed. So were you meditating or were you napping because of a late night party?
You can decide which one it is. But now I'm fine and alert, all right?
Okay. So if you are alert, where are you picking your spots in the mid and the small cap space? Because your first word was that markets are looking good.
Markets are looking good because I think, even this correction yesterday came at the back of a 1,000-point odd rally. And it is normal if you're a market operator that you will, create some short positions and you will sell out at this kind of rally, because this rally is based upon what? This rally is based upon liquidity. And you are, if you're a decent trader in the market or an investor, you will know that there will be bad days in the market. There will be bad days in terms of liquidity. There will be bad days in terms of news flow. Yesterday, apparently both happened at the same time. The RBI never came up with anything on NBFCs, and the FI sold in the afternoon. So it was a pretty potent mixture. So if you are in a rally which is not based on fundamental, which is based on pure liquidity, what it is today, then you will have to go through these good and bad days. And I think that's a good part of it. So that's the wonderful. Now, next part is what you asked the question is, what are we doing? I think what we are doing is taking cues from what's happening in the politics, taking cues from the new cabinet committee which have been formed for economic affairs, taking cues to believe in our belief that this 5-year term will be the term of the PSU stocks. They will be sold. I think the companies will be sold. First the industrial companies, then the banking sector will be put under the sale banner. So I think we are positioned pretty strongly. Large allocations to PSU companies has done reasonably well actually so far, and I think they should do pretty good in the times to come, both either in terms of a sale and value is pretty cheap, or in terms of dividend, whichever way. I will not complain.
The first privatization move will happen. You say first industrials and then banks and then non-core businesses. So I'm sure by now you must have your list ready also.
Yeah, I think power sector is straight away on the top of the agenda, that will be privatized first in our view, because there is global demand for utilities as a companies. It's a huge demand for pension fund, etc., who want to invest in fixed income utilities equivalent, and therefore we believe that the easiest ones to park out could be the power companies. And whether it is so the whole bunch of, and all the power companies, luckily in Indian context, the PSUs are profitable, leveraged reasonably, not too very badly leveraged, done well. This quarter performance has been good across the board. So the block of companies involved in the power sector, I think in our view would be the first to go, because they can be easily sold for global capital and likes these kind of companies. So and it doesn't have too many linkages with the rest of the government. Of course they need to sort out issues of discom, etc., but I'm sure they can do that. So in our view, I think power companies, set of power companies should be the first to go.
So, Ajay, are there any specific companies that you're thinking of? And you said that you've actually seen a pretty strong exposure there. Would you actually recommend investors to get into some of these names in anticipation of some of that privatization? Because it's not come through till now in all these years.
Well, I can't recommend any cases, for regulatory reasons. I'm not here to recommend, but I can only tell you that we have positioned ourselves pretty strongly in things like transmission, which is a power grid at this point of time, which is the #1 holding. And then we have gone into power finance, which is linked to power grid and the power sector. Then of course is NTPC, then of course is BHEL down the line. So it's a whole gamut of companies. There are not many, luckily, so it's not too difficult to pick and choose which one you want. But I believe that the transmission companies have, things like power grid, etc., have the best chances, best value, because they are into serious annuity income business and they can't be duplicated easily. They got a monopoly status. So if somebody is buying them, I think there will be a reasonable chance of annuity income. Of course, you can have a surprise in transmission company like GAIL happened yesterday, which can bring the price down quite sharply. But I'm quite sure that that some pitfalls will be avoided as the new government steps in. I think yesterday GAIL was a misfortune accentuated by market sentiments. So I'm sure those will not happen. So I guess you will start from the grid companies to the generation companies and then to the capital equipment would be the last in the hierarchy.
Okay. Ajay, do you think now there is enough and more reason to remain fully invested? Yes, you may have an odd bout of volatility. It could be 5% for large cap. It could be 15% for mid caps. It could be even higher for small caps. But if I have to talk about a very basic market approach, do you think optimism will be rewarded and one should be fully invested for the course of next 1 to 3 years now?
Difficult question, because we have got a cash holding of almost 20% at this point of time. Because we reasonably believe that the worst is still to come in terms of economic data. Whether it translates to share price, I don't know, Nikunj, whether that's going to happen. But I think it's wise to keep some money on the side. Fully invested 100%, no, we don't recommend at this point of time. And as I said, the reason being simple, it's a liquidity-driven rally. Fundamentals can overwhelm it at any point of time. And that's the point of time you want to keep some powder dry to go and invest into companies. So therefore, I think when you're looking into a euphoric market like what it is today, you must have something on the sidelines, and corrections will come. Let's be honest about it. Corrections will come. Nothing to do with India. It's global flows which make a difference. Oil prices are very benign at this point of time. They may spike up. So investing 100% at this point in an economy which is wobbling so badly, I don't think so it's a good idea. Now, whether we'll be rewarded in 3 years time frame, I'm sure we should be rewarded, because the question remains that how worse can it go? And the reason I say how worse can it go is why we want the 20% is that the drought conditions in the country could literally overwhelm the government finances as they try to get issues with distress, rural distress, farm distress, provide succor to people. Water is not easily available to, it's not like you give money and say go buy water. That's won't happen. So the government apparatus, the kind of cost involved in getting water to literally a population of America is not going to be cheap. And I think that's where the problem lies, that will that kind of upset the whole market dynamics for some time to come. May not be 3 years, but certainly the next 6 months. So I would say 20% money on the side is definitely required. You will get lots of chances to buy in this market.
Ajay, just hang in there. An important news update, and perhaps this would be of interest to you as well in all likelihood. There's been a sizable block deal in Indiabulls real estate. And remember, we've been telling you since morning that the Economic Times has reported that Blackstone and Embassy joint venture is a likely buyer of Indiabulls Realty stake of a promoter. Let's take it across to Ajay. He's got the entire lowdown. Ajay?
Well, that's correct, Aisha. We are picking up that the story which was doing the round since early morning has played out right now. The block deal which has happened in Indiabulls Real Estate. Blackstone Embassy JV is the likely buyer in that. Remember, the promoters of Indiabulls Real Estate, which is Indiabulls Housing Finance, holds 38% stake. And if you boil it down to Mr. Gehlot, the individual promoter held around 15% stake in IB Real, and that was the main contention, that the promoters need to exit the real estate business, probably raising the probability that their proposed transaction with Lakshmi Vilas Bank of Indiabulls Housing may actually go through. And they have been on record saying that they want to exit the real estate business and only want to focus on the financial business. With that in light, we are picking up that the first leg of the transaction is played out right now. One of the promoters in confidential terms has confirmed to us right now from Indiabulls Group that this block deal has occurred right now, and an official announcement from them is expected shortly. So at least the part of they want to exit real estate is panning out. Whether LVB Indiabulls Housing merger gets regulatory nod or not is still remain to be seen.
Yeah, this is a very, very interesting development. Let's take our conversation back to Ajay Srivastava. Ajay, irrespective of the promoter wanting to dilute its stake, considering the license for a bank or not for a bank hasn't come in, these hugely leveraged promoter groups would not be of interest to you, would they?
Sorry, can you repeat the question, please?
No, I just wanted to understand, Ajay, your take on, say, for instance, an ADAG group or the Indiabulls group. You wouldn't be interested in at all having exposure to these names, would you?
Of course not. But having said that, I think the good development that there is demand and enough capital available for promoters to exit a business like real estate in an environment like this today. So I think it's a great news for the capital market that there is enough capital on the side. The number two is disappointing is the valuations. It's almost a deal, if I'm not wrong, is going at one-time book value, which really tells me that the business had no premium built into it. So to that extent, if you're a fire sale mode, there is enough capital available. Now, taking this as an example, if you want to invest in RD, ADAG, etc., I don't think it's it's a good idea because not only the issue of what's the residual value of the business, but also the regulatory risk of what's happening in those companies, kind of transactions. You already saw ILFS post that SFIO. You've seen in Jet Airways, SFIO has walked in. So some of the companies which had definitely had regulatory overhangs will continue to have them for some time. So it's not a wise thing to take this as an example and start investing in those kind of stocks. I think it's, I keep saying it's good money you've earned. Why do you want to risk it with somebody who's lost the money and hoping that you will get a revival in that company? That's not a good idea for an investor. Sure, a speculator can do it. He can sell and buy at 10 paisa difference in a day. That's a job of a speculator, not an investor. You got good companies, your hard-earned money, do not waste it.
Ajay, I also wanted to understand, in light of the correction that one has seen in ITC, there's lots of rumor doing the rounds that perhaps in the next GST meeting there is going to be another sin tax coming in by, and maybe in specific a tobacco tax or what have you. Would that be, or rather, would that make you a little wary of investments into liquor names or for that matter some of the tobacco names?
Oh yes, we have pared down our holdings. You're right, absolutely correct. That, again, we look at the budget of the government. There is no discretionary money left for them to spend on any of the schemes they have announced, whether Ayushman Bharat or whether it is PM Kisan. Money has to come from somewhere. The normal sectors of the economy are fully loaded and under the GST Council. So now what is left with the government in the budget? People speak about budget. Budget has lost relevance because only a GST Council decides all the domestic taxes. Only import taxes can be levied by the budget at this point of time. So therefore, I think it is logical to assume two things will happen down the line. One is more resources will be required and therefore who can you go and tap? Tobacco and the sin taxes. Number two, of course, is liquor companies have an overhang now that with this kind of government majority and the preponderant theme is that we should have prohibition in more states than one. I think we could see a lot of pressure coming in the assembly elections on, the local, the parties announcing prohibition in the states. We saw some resonance of that in Telangana. We can see some in Northeast. So I think the liquor companies are going to be pushed against the wall in India in a scenario that we are seeing today of the demand for prohibition, and that should shrink the market, or at least make it uncertain. Sin tax definitely is on the way in a big way because there is nobody else who can pay the taxes. Income tax is over, excise, these GST rates are already much higher. So where do you go for money? Easy money is where the liquor and tobacco is. So I would think it's prudent to believe that these will be taxed in a very large measure, if not in this year, but in the years to come.
450, it's become 300. ITC was 320, 330, it's come down to 280. So that's what markets are believing in. But you could also remember that this, you can tax them, but beyond a point, if you start taxing these countries, and I'm not talking about the health hazard here, I'm purely talking about the economics here, is that if you start taxing these industries, there's a whole state tax collection and a central tax collection which is at play, then automatically you are killing your cash cow. So because beyond a point, if you start taxing them, unaffordability is only going to increase, black marketing and smuggling will only increase. So we've seen that in the past when, cigarette counterfeits have got created, smuggling has also increased in cigarettes, BD as an industry went up. So that's my limited point here, is that you got to understand that there is till certain tax level it makes sense both to tax them, and that tax will also have impact on consumption, but you don't want to take the tax levels to that level where it actually will just start giving a huge amount of runaway pathway for smuggling to happen, especially in the case of cigarette. That's my limited path. And Ajay, I think this is something which government is going to be cognizant of. We've seen in the past where cigarette smuggling, especially from neighboring countries, had become a huge menace.
Europe, it is the biggest item being smuggled across from England to France and everything is cigarettes. You know it very well. So I think, having said that economic logic, I think there is a political dynamics playing out as well. And the scramble for resources, that's the problem, Nikunj, that where do you find this money? Now, we have made the promises as politicians. The country is in distress in a large measure. They need to find the money. Now, where do they get quick and easy money? Yes, you're right, absolutely. Long-term economic fallibility, the curve will start falling. Marginal revenue generation curve will fall. All that is correct. But in this order of next 12 to 18 months, where does the government find the resources? You already saw the defense situation playing out with AN-32, with obsolete aircraft. They need to spend money on it. The drought people need money. The government needs money. This healthcare for all needs money. At the end of the day, in an economy growing at 5 and 5.5%, who is going to fund all these plans? Someone should and will. And that only place is that you go to the guy who can't get out of addiction and buys a packet of cigarette at double the price. I think there is no, maybe he'll downgrade perhaps, but there is no choice. So economic logic notwithstanding, I think circumstances will force this, at least in the present context of the budget and in the next 12 to 18 months.
So Ajay, how should we summarize our today's interaction? You were sounding bullish, but yet you're sitting on cash. What does that mean?
Okay, it means quite simple, and I think that's important to understand, is that you have to wait for the economics to play itself out, and this kind of market which runs on liquidity will give you lots of chances to buy into. And the reason I said buy into, why we get cash, is because obviously every year most investors generate more cash income, surplus income, so they have fresh money to invest. So it's incremental money coming into the system. Now whether you want to deploy it in this market at these stratospheric levels, I would say no, definitely not. Whether I'm exiting the market, no. So it's a greed and fear at the same time. It's actually, it's a pretty I don't know how to explain it to you. I feel there'll be enough chances for me to buy in. Still I'm holding on to the long position in various stocks. So it's kind of difficult to explain, but I would say that in an economy that we are in, this will give lots of chances. We have not seen the end of the economic cycle on the downturn. We will see more of it in the April, May, June quarter. And I know lots of brokerages have said 25% growth rate, etc., etc. That's all bunkum. There is no 25% growth any CEO is talking about in this country on earnings side. So leave that aside. The only thing where we are fully invested is the banks. And the reason I tell you, Nukun, very quickly is because banks are the protected species of India. If you historically write back economic history for the last 10 years, the single reason why India has struggled on growth is that the banks have taken too much off the table in profitability. There is no other reason why bank loans are still not linked to RBI rate, repo rate in the market. The banks have stalled it for some time, for a long time now. It was supposed to be on the agenda for last year, they have stalled it. So if you write economic history today, half the problems of India come from huge profiteering by a protected sector of banks under the RBI umbrella. You link all the loans to RBI repo rate and you see the economic growth going up. So the only place we are max invested is banks, because it's a protected species, has given fantastic return, will give more superlative return, because the NBFC imbroglio is going to now give people the only option to go to banks to borrow, and they will really be Shylocks in the market. So, well, we don't like Shylock, but he made the money, therefore we will invest with Shylock. So only place fully invested is right now is PSUs and banks. We believe a lot of other sectors we will get chances to buy at a better price.
Ajay, thanks so much for joining us this morning. Great to get your perspective on things. And
Thank you very much for having me.
Makes more sense than you think, the entire mix of greed and fear. That's what we're seeing reflected on our index as well this morning.